Hey Inspiration, Andy here. Hope you're doing well. Back with another video. This topic today is 5 money hacks to make you richer today. This is mainly going to be based on financial stuff. A lot of these tips you'll be able to use in all areas of your life though. So grab a notepad and pen and we'll get started. First of all, if you do like this video and like any other videos, I'd ask you to consider subscribing to the channel. Here at Inspiration, we like to focus on finance and personal finance, that sort of thing, business, and then lifestyle and kind of mentality and mindset. So if you like any of those things, why don't you go ahead and click the subscribe button below. If you like this video, then give us a like as well. And if you have any comments or questions, then feel free to pop them in the comment section below. But let's get on with this video, and yeah, I'm going to share my screen with you and go through some of these principles with you right now. Okay, so point number 1 here is save and invest. Most people do the first thing, so they do saving, but they won't necessarily do the second thing, and I'll explain to you why that is not a great idea, although it can work in some instances, and I'll explain what instances that can work in and saving can work in. Yeah, most people do the first but not the second. Most savings accounts don't actually accommodate for inflation, which on average across the world, across the global market, is around 2% a year. Most savings accounts don't actually go up much above that or even close to that. A lot of them are actually lower than that. So what you want to do if you're just going to simply save, which is perfectly acceptable, and in fact it's highly encouraged, especially on this channel, is to look at high interest savings accounts, so ones that will actually keep up with the rate of inflation. So you want to do your kind of own due diligence on that, and see if you can find ones that will keep up with the rate of inflation. But most savings accounts, most regular ones, will not, so you're going to have to look for a high interest savings account there. So the second half of this tip is the invest in the stock market section, and a lot of people are very wary about investing in the stock market, mainly because they don't quite understand how it works, and they know of people that have lost a lot of money. It is risky if you don't know what you're doing. However, there are things and assets that you can use to your advantage if you don't know what you're doing, and they are quite safe and they are quite simple to set up. And those things are investing in the stock market through ETFs and index and mutual funds. Essentially, with ETFs, index funds and mutual funds, it takes an investment and spreads it out over a great number of companies. So a really famous and popular fund is the S&P 500. So this takes the 500 richest companies in the world, and it basically says, I'm going to take your $25 and I'm going to spread it out between these 500 companies. And a lot of funds are automatic, and some funds are controlled by a fund manager who divvy out your investment into all of these 500 companies. And essentially it is a safe way of keeping your bases covered, essentially. So you can, if you lose money in one company and gain money in another, then you don't lose too much. So when you spread yourself a bit thinner, you're less likely to lose money. You're less likely to make more money, but generally these funds will make more as inflation goes up and other things go up. So it actually helps with the rate of inflation, and it is a positive outcome for that. So yeah, what I will say with this as well is this is not financial advice. You will need to do your own due diligence on the sorts of funds that you can go in for. The other thing that you will probably want to do is utilize tax laws and advantages. Tax-free investment accounts are certainly something that you can look into, particularly if you're in the UK, but they might not necessarily be the same in other countries, so double check. But I'm pretty sure you can get tax-free investing accounts up to a certain amount in pretty much every country. Another thing that I would suggest is also starting with a small portfolio and then slowly growing it. That way you kind of get used to the idea of consistently putting some money aside. And I would suggest, starting with a quite consistent stream. So like once a week or once a month, you put aside a certain amount of money, and you know that that is not something that you're going to touch. It is going straight into investing into the stock market, into savings, and is going to invest into your future essentially, and some of the other tips will help with growing this interest. We will explain those in a little while. And the other thing that I would highly suggest is only putting in what you're willing to lose. So don't go putting in your life savings. If you're not comfortable with a lot of money at the start, don't put in a lot of money. That's, I'm not suggesting, this is a get rich quick scheme. It is a way of making you richer today, but it's not going to make you a millionaire today. So I highly recommend only putting in a small amount to start with, and then growing it slowly as you get more used to the fluctuations of the market, and putting your money into the stock market and investments like that. So the second way to make you richer is number 2, diversify your income. So most people usually have one stream of income, and that is usually their job. However, the average millionaire actually has at least 7 streams of income. You will hear of some kind of millionaires that have mainly just one stream of income, but the average millionaire has about 7 streams of income. Most successful people will have multiple streams of income, and there's many upsides to this. So one of those advantages is more security. So for example, if you lost your job, you would not be completely out of income. So if you've got multiple streams of income, if you lose your job, it's not the end of the world. You've got that savings, or you've got that investment that is giving back to you, that you can use to pay for bills and pay for essentials, and you can cut back on a few things. So it's definitely good for security. It also gives you more freedom, so it gives you a bit more job satisfaction, so you can actually go for things even if it's not the most high paying job. You can actually go for a job that you actually enjoy, because it's not all about the money. It also allows you to be able to quit a job that you might not like, so that's a huge positive. And also it allows you to kind of go traveling or go on holiday if you're saving up this money. So it gives you more freedom. So income diversifying options, these are just a couple of things that I've written down, but there are so many ways you can diversify your income. The first one is a side hustle, finding something like Uber or Deliveroo, or being a delivery driver now and again, and you can choose your own hours. And there's so many ways to do this. These days it is super easy to do. The second one is property renting or lodging. So if you even if you don't have a property, you can find a property and sublet it out. I know that's something you can do in this country. You might have to check the property laws in your own country, but that's definitely something you can do in the UK, as long as you check with the landlord first. But if you have your own property, then it might be something that you would look into, whether it's a room or the whole place, and then you look at finding somewhere to rent that is cheaper and actually creates a second income for you, and reduces your bills as well. The other thing that you can do, number 3, is start a business. There are so many business ideas that come and go. Don't get put off by people saying, most businesses fail. The reason why most businesses fail is because most people give up. And so starting a business is a great thing to do, and it's a great little side hustle, and you can build it up to eventually maybe even be your main source of income. And then lastly, investing in dividend stocks. So obviously we were talking about investing in point 1, but investing in dividend stocks is slightly different, and I'll explain why. Companies, dividend stocks basically is a way of companies rewarding their investors. And basically how they do that is it's an incentive to keep your money in the company. If you keep your money in the company every quarter, every year, the company will say, thank you very much for investing and keeping your money in there, in our company. Here's a bit of money just to keep you interested and keep your money in the company. And it's huge companies that do this as well. You want to do your own research on some of the companies that do dividend stocks, and you can get the percentages of how much they pay out and how often they pay out as well. So popular companies that do this include Coca-Cola, Colgate, Johnson & Johnson. There's loads of other ones as well. What I would also recommend is looking at dividend aristocrats. So these are companies that have been giving out and paying out dividends consistently for over 25 years. So that includes companies like Coca-Cola, Colgate, Johnson & Johnson, Black & Decker, all these kind of huge companies that have been doing so well for so long and consistently growing and growing because they've got such a good product or good suite of products or business models that they're able to be able to thank their investors. And so dividend aristocrats is another way of giving yourself an extra income either quarterly or yearly through a dividend that the companies pay you. Number 3 on the money hacks to make you richer is to create a passive income. Most normal incomes are based on trading your time for money, and that's kind of the 9-to-5 standard job. So you work a certain hours and then you get a certain wage. What if you made money without always having to put in the time? And that's basically called a passive income. So you don't necessarily put any or much time in and you get out an income. With most passive incomes that I've found and most other people have found, there is a tremendous amount of upfront setup. There often is some maintenance required, but it's mainly about the upfront setup. It's something that you can make money even when you stop working. So for example, while you're sleeping, while you're eating, while you're spending time with your family, you could still be earning money because the business model is set up to work passively without your input, whereas a regular job, the money doesn't come without you putting in the time. So it's a great way to maximize time in general to give you the most amount of income possible. And some examples of passive incomes, you've probably heard of quite a few of these. So there's e-commerce. These days, online businesses are huge. So things like FBA, fulfillment by Amazon, drop shipping, affiliate marketing. Another thing that you can do is a blog or videos. So like, for example, YouTube, and you can get advertising from that. And that's a kind of form of passive income. Once you've created the blog or the video and the advertising is up, it pays for itself as more people click on it. Another one is app creation. Obviously, this will require updates and that sort of thing. But obviously, you can either make that money through advertising, or you can ask people to pay for the app up front. Another thing that you can do is you can create a digital product, either a video course or just an online course in general. Another thing you can do is create a book, and you can also make music. There are loads of other ways of creating a passive income, but these are the ones that I could think of off the top of my head. But there are loads more. So have a little research, see if you can find one that works for you. So number 4 is compound interest. Now this is a really cool idea and concept, and it works really, really well in the long run. It is a kind of short-term and consistent way of investing into something that is going to reap the rewards on a fast scale in the long run. So what it does is compound interest, essentially it takes the initial interest of the amount that you've deposited in an account and it reinvests it, so you've got more in that account when the interest comes back around. So for example, you initially make an investment of £5,000, and the interest per year is 10%. Now that's a lot. That's just an example. It would be a lot less than that. Obviously, interest is not that high, but this is just an example. Your initial investment is $5,000. Your interest per year is 10%. And so the interest after the first year would be $50. And then after you've reinvested that $50 back into the account, your total after reinvesting would be $5,050. So that's not exactly a lot. However, if you do this consistently over 25 years and you don't put any more money in other than the £5,000 that you initially put in, over 25 years, the interest will accumulate that amount over 25 years to over $54,100. Now that is incredible. You're only putting in $5,000, but you're getting out after 25 years over 10 times more. What I would recommend as well with this to utilize it even more is setting aside a monthly or annual savings to put towards something that will utilize this tool. So whether that is the stock market and you reinvest your dividends, which is a very popular thing to do with dividend investing, or you can use a high interest account, and if the interest is above a certain amount, then it will grow and grow and grow and grow, and you can reinvest that interest. And it's essentially a snowball effect. In fact, let me show you, there are plenty of compound interest calculators out there online. You can just type in compound interest calculator and you can find a load of these, and you can work out how much you could possibly get for your money based on the compound interest. So let me jump into a compound interest calculator that I pulled up just now, and I can go through this in real time, how much you would actually make. So this is a compound interest calculator that I've just found on Google, and as you can see, I've already put in some stats here for selected dollars. So the initial balance that we put in is £5,000. The interest rate every year is 5%, say. That's a bit more reasonable than the 10%. And then the calculation period. So this is the number of years that you are willing to invest. And then the compound interval would be monthly. And then also another thing that I mentioned before, this is the regular monthly deposit. So this is the amount that you'd be putting in each month for the next 25 years. And you can see how much it grows through consistent reinvestment of both the interest and a monetary investment that you put in each month. So if I hit calculate, it calculates the amount of money you could possibly make. So obviously you've got the initial balance here of $5,000. You've got the total monthly deposits, which will be $30,000 over 25 years, the annual rate of 5.12%. And then your final investment value is a whopping $77,205.55. Bearing in mind, this is coming from $35,000, you're turning it into $77,205. And the total interest earned, so this is how much of this total is actually interest. It is $42,205.55. So it just shows you how powerful compound interest can be when it is utilized. Obviously it takes a long time to do, or can take as long as or as short as you like. It depends on how much you initially invest and how much you continually put into the account. But the more you put in, the more you get out. So compound interest is very much a useful tool, no matter where you are, no matter what stage you're at. So the fifth and final hack is focus on assets and not liabilities. Now this is probably the most important thing, because people get very confused what an asset is and what a liability is, what a true asset is, and what a true liability is. So assets essentially are things that put money into your account or your pocket. And liabilities are things that take money out of your pocket or take money out of your account. So I've got an example here, and this can be an asset or a liability. So if my example here is a house. Is it an asset? Well, that depends. Let's have a look. So if you live in the house, if you're paying bills and you're paying for maintenance and all that sort of thing, having a house always has bills and maintenance, then it takes money out of your pocket. And unless you sell it off for a profit when you move out, it doesn't really put any money in your pocket. It's better than renting. 9 times out of 10, most people say it's a good investment to have, and I would agree with that. However, is it an asset or a liability depends on the way that you utilize it. So the alternative to just living in it and paying for bills is to rent out the property. And what this will do is it will give you an income coming in, which can potentially pay for the bills on the property and the maintenance of the property. And it also may even put money in your pocket every single month. So it is another stream of income. It's another passive income, if you will. So this is the difference between an asset and a liability. It is definitely a bit more risky to flip a house, and you kind of need to know what you're doing when you're flipping houses for profit. So the best way to kind of get a consistent stream of of income coming in is by renting or by bringing in lodgers to your house. You don't even necessarily need to rent out the whole place. It could just be a room. It could just be, these days you can even rent out parking spaces. So if you've got a parking space that is in an area of high demand, then you can rent out that. And that is another asset that you have. There you have it, guys. 5 money hacks to make you richer today. And if you implement all of these today, then you are well on your way to becoming richer in more ways than one. So let's just go over these 5 tips. So the first one is save and invest. At least please save. If you're not comfortable with investing, then start off small and work your way up. Number 2 is diversify your income. The average millionaire has 7 streams of income. Number 3 is create a passive income. So creating an income that works for you even while you're sleeping, eating, or spending time with your family or friends. And number 4 is utilizing compound interest. So setting aside money that goes into an account that will reinvest the interest and keep reinvesting over a long period of time until it just builds and builds and builds in a snowball effect. And the 5th and final one is focus on building assets and not liabilities. So assets put money in your pocket, and liabilities take money from your pocket. Anyway, guys, thanks so much for tuning into this. I hope you found some of that helpful. If you liked it, then please give us a thumbs up just to let us know that you enjoyed it and you enjoyed the content. Also, if you're interested in anything like personal finance and economics and how things work, or business, or lifestyle, whether it's mindset and that sort of thing, or businesses in general, then if you like any of these things, it might be worth subscribing to this channel. And if you hit the notification bell, then it will notify you when we've got a video coming out. And yeah, hopefully you won't miss anything and any nuggets of knowledge that may change your life. Hopefully some of the stuff that we've covered in this video today changes your mindset or your outlook or your life in the better. And if it does, let us know in the comments section below. But thanks so much for watching. I really appreciate all your support, and I look forward to seeing you in the next video. See you soon.